Pearson's chief financial officer has announced he will follow the CEO out of the door later this year, as the education firm said today it expects to hit profit of £590 million, at the bottom of its guidance.The US Higher Education Courseware arm of Pearson's education publishing empire represents 24% of revenue yet fell 12% over 2019, the company revealed today, dragging down good performance elsewhere. Read more. Pearson CEO to depart as it sells $675 million stake in Penguin Random HouseStudents, stopping buying Pearson's physical textbooks, and a sharp 45% drop in print bundled book and ebook sales drove the decline. Pearson is seeking to shift to a digital business model and today reported that digital makes up 63% of revenue now compared to 37% comprising print products. That compares to 2018's split of 55% and 45% respectively. However, the education publisher warned that it is not seeing good ebook sales to replace poor textbook sales. But those weaker sales were offset by a strong performance in the wider 76% of Pearson, the firm said in its trading update. That larger part of Pearson grew 4% overall. Pearson's English language test grew 17% in popularity and professional certification rose 10%. A £350 million share buyback is set to start today from the sale of Pearson's stake in Penguin Random House, while Pearson delivered annual savings of £335 million at the end of 2019. Read more. Pearson bags Home Office contract to offer English language tests. Pearson saw flat revenue growth and said it would deliver £590 million operating profit, to the lower end of its guidance range for 2019. In 2020 the publisher expects more declines, predicting operating profit of between £500 million and £580 million, including the 25% stake in Penguin Random House. Pearson is now a simpler, more efficient company, with strong financial foundations. This enables us to continue to invest in digital innovation and platform-based products, Chief Executive John Fallon said. The future of learning will be increasingly digital and consumer-defined. Experience, outcomes and affordability will all matter, and while there is still much to do, we are well placed to benefit from these trends to achieve future, sustainable growth. Fallon announced his own plans to step down in 2020 after the firm sold its stake in Penguin Random House in December. And CFO Coram Williams today said he will leave the company later this year for a role in Europe. Deputy CFO Sally Johnson will take over the role after a smooth and orderly transition. Read more. Pearson share price drops as weak print sales hurt profit. Pearson is in a strong financial position and we have laid the foundations to achieve future long-term sustainable growth, Williams said. I am now looking forward to ensuring a seamless transition to my successor, Sally Johnson, and for more on this story, visit the news article link.